right. Well, my clock says 10 o'clock, so I'm going to go ahead and get started. And welcome for all of those who are attending live. And if you're catching this later as a recorded video, it's great to have you here. And I'm excited to launch my first Tax Tuesday. So the first Tuesday of each month, I plan to answer questions and go live for my clients and for my community. And I'm excited to get started. Bear with me since this is my first one. If I have some tech issues or anything, I promise I'll come back. So let's get started. My name is Heather Ryan, and I am the owner of Tax Queen. I support digital nomads, RVers, all that good stuff. I am one myself. You can see as right now I'm sitting in my RV. I travel part-time. I'm not full-time anymore, but I still love to travel and balance work and exploring and hiking and being outside and all that good stuff. So welcome, and I really appreciate you all being here, and excited about launching my monthly Tax Tuesday. My first question that I received was related to using Starlink and taking that as a deduction. So Starlink, or if it's Verizon or AT&T or using a hotspot or something, they are deductible as far as a business cost. And that can be purchasing hardware and a monthly cost. And it's really just a matter of how much are you using it for the business. So if you're using it, 50% for business, then take 50% of the cost, monthly cost, and the hardware cost. We all know Starlink is not cheap, right? It is an expensive endeavor, but I think it's worth it. Many people have found that it's really worth it for those who like to be off the grid and kind of out of the way. It's been really helpful. So yes, the answer is yes, you can take a portion of it if you're running a business and using it for your business. Remember that you're also using your computer to watch Netflix, to check personal email, to use Facebook and whatever other stuff you're doing on your computer. So when you're using the internet, or whether it's Starlink or whether it's a hotspot, just be aware of splitting those costs. The other way I've seen it done is paying for one if you have multiple, because we live on the road and many of us have multiple plans. Pay for one plan through the business and keep the other one paid for personally. That's kind of the same thing, and you're splitting it 50-50 essentially still. So that's normally what I would recommend for those, especially just getting Starlink. Another question I got, let's see. So I'm trying to figure out the best way to stay organized and on top of where all my money is going. Is there a good financial program that I can use? So this kind of has two parts to it. So are we talking about business ownership? Or are we talking about personal finances and having a budget, setting a budget, sticking to that budget? So I'm not a personal finance person, but I can give a few recommendations. Number one is YNAB, or your, gosh, I forget what it stands for, but YNAB. And I've heard it's a really great budgeting tool. There's also Mint. You can use stuff like Quicken. There's all kinds of budgeting apps out there. So I recommend finding the best one that suits your needs and that you're going to use on a daily or weekly basis to set your budget. As far as business is concerned, QuickBooks, the number one by far used in the United States. So just be aware of that. I do not recommend QuickBooks Online, QuickBooks Self-Employed. I do recommend using QuickBooks Online, but not the self-employed version. And I don't like the self-employed version because it's not comprehensive. So it's really not an accounting software. It's really a glorified spreadsheet in my eyes. It's just really difficult to separate things, and it doesn't run reports well, and it doesn't grow with you. So if your business is going to grow and you need to upgrade and step up to the next level of QuickBooks, it's just not there for you. So just be aware of that. And I am going to share this, my QuickBooks affiliate link, and it will give you 6 months at a discounted rate. So if you're just getting started, feel free to use that and you get a discount. It's a little longer. Normally, I think they only give you 3 months, so mine will get you 6 months at 30 or 50% off, whatever their latest craze is. So there's my link for QuickBooks. And if you're looking for a free version, Wave is a really great option. It's, to me, not quite on par with QuickBooks, but it's pretty close. It's pretty awesome. I have a lot of clients that use it with success. And again, it's 100% free just to use, to keep your books. It does have bank feeds, all of those connections. So it's a really still a powerful program. So Wave is also a good option. There are other things out there. You can use Xero, you can use FreshBooks, but these are all for businesses. So just trying to separate whether you're using business or personal finances. Let's see, one other question. So I'm running a seasonal membership or subscription program, and I'm due to receive a chunk of my subscription fees from members in December, even though our expenses will not occur until January or March of 2023. How do you minimize the extra bump, right? So your extra bump in income on taxes. So that's a good question. Yeah, prepay as many expenses as you can. Prepay even the contractors if they'll let you. I'm not sure if they would want to do that because that's going to bump their income up for the year. And otherwise, the other option to do this, if you're not a cash bookkeeping, if you do accrual bookkeeping, then you would recognize the income when it's being hit, which would be January through March. I'm guessing that's when your membership program would be running. So that's the other option that gets a little more complicated, accrual bookkeeping. If you're not familiar, cash bookkeeping is whenever the cash hits the account, right? Or it leaves the account. That's when you're recording the expenses and the income. With accrual, it's when the work is being done. So that's the difference, and that may help you with your taxes for this year. But if you launch it again next year at the same time, you're going to have the same problem. So just be aware of that. But yeah, definitely having any extra expenses, buying computers. I also recommend, if you can afford it, contributing to retirement accounts. Those are great tax benefits and help reduce taxable income. And there's a second part to this question. We have 2 independent contractors who work on this with us, and I'm sure they'd be prefer to be paid in January, so their income falls in 2023. Is there a way to pay them at the end of the day on December 31st to make this happen? Their time zone is ahead of ours. If you're cash basis, yeah, it's when the money leaves your account. So just be really aware of that. And sometimes money can take a few days to actually hit accounts. Even if you hit the send money now button, depending on the service you're using, it might still take a couple of days. So just be aware of that as well. We are independent contractors working as gate guards. I had several people reach out to me with questions about gate guarding, so that's kind of cool. I do have clients that are gate guarders, so that's, and I've had friends do it as well. And as independent contractors, you do receive a 1099, that's correct, for all wages earned with no taxes withheld. That is also correct. So let's see, the questions around this. Should we or do we need to become an LLC? So this is, the LLC is like, I don't know if it's misunderstood or it's just people aren't familiar with the term and what it actually means. Being an LLC does not save on taxes. So it doesn't have an automatic tax savings button when you become an LLC. A single member LLC is still a sole proprietor, no different than if you just operated under your legal name, right? So as an example, I can be Heather Ryan and being gate guarding under Heather Ryan with my social security number. And if I register an LLC, even if I say Heather Ryan LLC, I'm still the same exact thing for taxes. Absolutely no different. So it's not going to help you save on taxes just to be an LLC. I'm not a lawyer, but the LLC stands for Limited Liability Company, and therefore the LLC is there to help limit your liability. So it's the legal aspect, not a tax aspect. If you're a multi-member LLC, so a lot of times even husband and wife, if you register as both owners of the LLC, you now have a partnership. So just be aware of that. A partnership is a completely separate tax return, but again, it doesn't offer you any tax savings. So be aware. So that is question number 1. So your gate guarding or any other contract work, really, because that applies to any 1099 contractor, LLC does not help you save on taxes. are we required to, or is it necessary to file quarterly estimated taxes? So you don't file anything. Quarterly estimated taxes are simply payments. And the IRS and the US tax system is a pay-as-you-go. So you should be paying into your tax liability throughout the year. And that's why they have the quarterly estimated tax payments. If you're not familiar with that, that's we have a January 15th. So that's for the previous year, April 15th, June 15th, September 15th. Those are the deadlines, and they can vary. You know, if the 15th falls on a weekend or holiday, it's going to be around that date. So just be aware of that. You do not file anything, you just log on and you pay into your tax liability for the year. Whether or not you should be paying into it, that's an individual situation. So some people might have a W-2 job and they're paying into their taxes through that W-2 work, and then they have a side hustle. So in that case, you may not need to pay in. If the business or the 1099 contract work is your sole income, then most likely you're going to need to pay into taxes. And I do recommend paying quarterly estimated taxes. So again, it's not filing anything. It's literally just going on irs.gov/payments, where you can make a payment to your estimated taxes for current tax year. So right now we're in 2022, you would pick 2022 estimated taxes and make a payment. And as far as probably the next question you might have about that is, how much do I pay, right? And that varies according to person by person, individual situations, what your deductions are, what your credits are. So just be aware of that. I usually work with my clients on an individual basis to go through that and to do some tax planning with them and to give them what their estimates should be. But basically be aware that you need to pay in as much as you paid in last year, or what your liability was the previous year. Yeah, that's probably the biggest goal, is to either hit what you made last year or paid in last year. If your income went down, you have to just make sure that you're at 90% of this year. And if you owe less than $1,000, there's no penalties for underpayment. So that's the biggest thing, and why we pay into our estimated taxes is because if you don't pay in enough throughout the year, you're going to get an underpayment penalty when you go to file, if you wait until April to make your payment. So just be aware of that. It's not a huge penalty, but I like to not pay any extra than I have to the government. And I like to see my clients not pay extra. So that was question number 2 about being a contract worker. This one is very specific to being a gate guard, but it could be applied to other camp hosts or work campers. So living and working full-time at an oil field as a gate guard, what expenses can we claim? Can we take our food? Can we take depreciation on the RV and the truck? What about our loans? So the biggest thing I'm going to say here is, just because you need an RV, that's a requirement of having the job, or even sometimes being a camp host and things in campgrounds, you're required to have an RV. That doesn't make your RV deductible. So it's still your home. If you're a full-time RVer or full-time digital nomad, and you're living in an RV full-time, you have no other residence, no apartment, no like sticks and bricks home, then the RV is your home and it doesn't make it deductible. Just because you're living on site at a business, there's just no deduction there, and it's just not allowed. That's really the reason why. If you had a separate home and you just camp hosted, half of the year, or maybe even gate guarded, 3 months or 6 months out of the year, then there's a possibility that you might be able to start taking that deduction. But these are really things that are individualized. It's not all gate guards can do this thing, and it's not all business owners can take this deduction. So I would really work with a tax person and make sure that it fits your situation personally and individually, what's going on there. So just be aware of that. But really the reason why you can't take your house, I mean, it's your house, right? And it's just like a sticks and bricks. You can't just take your whole house because you use it for business. You're allowed to maybe take a piece of it, but in the RV, nothing is really set aside 100% for business use at that point. So it's very difficult, and it's such a small deduction. I don't like to raise red flags if that's the case. There are exceptions for business owners. And as far as food, you have to eat. Everyone has to eat. Their food isn't deductible ever, really. The only time you're deducting food is if you're entertaining a client. So you're taking that client, maybe I shouldn't use the word entertain, but you're taking that client out to lunch to have a lunch meeting. You're buying them a coffee, you're taking them out to dinner to discuss a contract. Those are deductible meals expense. Or if you're traveling, so as in you leave your RV behind and you're going to a conference or something, in that case, then you might be able to deduct some of that food that you're incurring as you're traveling. But again, traveling in the RV is not, it's not just deductible. It's your full-time home. So just like you can't take your groceries on a regular basis, that's just, we all have to eat. The other thing I wanted to point out, as far as the RV and that it's necessary to do the work, it's no different than a nurse who needs a license, right? So if you're a W-2 employee or whatever, you can't deduct the nursing license. You can't deduct your scrubs if you have to buy them for work, or if you're an electrician or contract construction worker, you can't take your steel-toed shoes and your helmet that you need. Those are not deductible. If you have a business, a 1099 business or 1099 contractor that makes you a business owner, then you can start looking into some of those deductions. But just think of it that way, as like, just because a nurse needs a nursing license to have that job does not mean that it's deductible. So just be aware of that. Hopefully that answers those questions about being gate guarding, just in general being 1099 contract worker. I also like to remind people that are contract workers, you do have a business. Many people aren't aware that they have a business. They're a business owner if you're a contract worker. So you can take some just expenses. Don't forget about that. You're taking, as we talked about earlier, your Starlink, right? Or whatever you're using to connect to the internet. That's allowed. It's a business deduction. So just be careful with all those and look for all the deductions you can take instead of worrying about the ones you can't. How's that? We'll look at the positive side. So let's see, one other question. My question is in regards to our home and being able to take tax deductions. We live in our RV full time. We would not be able to do this job without our RV. So I kind of just covered this, and it's your home. And that's really what I like to push forward. Like, that's your house, and it's no different than a business owner working out of their home. You can't just take your whole home. You can't take, all the mortgage for your house. You can't take every expense related to it. It's just not allowed. But we all need a place to live, and I like to still look at the positive side of things and say that you're getting the freedom of choosing where you work and how you work, sometimes even when you work. So just be thankful of that. And yeah, let's see. I just wanted to read anyone showing up late. Please feel free to write in some questions in the live chat, and I will try to get to them as well. Let's see, what else we got? I am trying to register my camper van while it's undergoing a conversion. Insurance will only insure as a commercial vehicle, and I want to register as a personal vehicle. What are my tax liabilities or any traps associated with this? So this question is really around insurance. I'm not an insurance agent, so I can't answer it as far as insuring the vehicle and using the camper van or the cargo van as a commercial vehicle. Like, that is not my wheelhouse. As far as I want to address this, as far as using a vehicle for a business, especially as a van or an RV, and we kind of touched upon this, right? It's your home, number one. If that's your full-time RV or full-time van life, it is your house, so be aware of that. And it doesn't make it deductible just because you're traveling in it and doing your work from it. That does not make it 100% deductible. As far as, let's see, what are the tax liabilities? I would also recommend to never have your business own your RV or your vehicle that you're using. You can reimburse yourself or take, business mileage for use of a truck or a towed vehicle, but I would never have your RV owned or van owned by your business. So I would always have it personal. So in that case, I'm not sure why they're making you have commercial insurance and register as a commercial vehicle. because it's your personal vehicle and you might just happen to be using it for some business, and that's okay. So yeah, that's an insurance question. Talk to an insurance agent. Let's see, what else? What's the difference between an S Corp and an LLC? So a little bit earlier, I kind of talked about an LLC. So LLC stands for Limited Liability Company. I'm going to reiterate that it offers itself no tax savings. So you have single member LLC, you have multi-member LLC, which can be 2, 3, 4 or more, even husband and wife LLCs. Okay, so these are set, again, no tax savings. It's really the whole legal aspect. So separating business and personal, you have two different buckets. One is for business, one is for personal, and that's the whole idea, that there's a line or an imaginary line between the two. And we're not commingling funds, remember that. It's really important if you have an LLC or any kind of business structure, that you're not commingling personal and business funds, right? Completely separate, and that's going to help strengthen that separation of business and personal. So if you're worried about liability and legal aspects, please speak to an attorney. I am not an attorney, so I can't answer those, but I'm just giving you the basics. As far as tax savings, there is no tax savings to be an LLC. And as far as what's the difference between that and an S Corp, so an S Corp is a tax election that does offer tax savings when you start to have higher income. So when you're at $50,000 or $75,000, you know, net income, so your net profit, not your revenue, but your net profit at the end. So we're viewing net profit is revenue or income that you're taking in minus any expenses. We now get your net profit. So the S Corp is there as a tax election, and an LLC can elect taxation as an S Corp, and it's going to offer you tax savings. So we were also talking a little bit earlier about your self-employment taxes or paying estimated taxes. I actually don't think I covered self-employment taxes, but we're making quarterly estimates. So as a business owner, you're usually responsible for those self-employment taxes. And that's the whole big hit, right? Well, a lot of us find out when we become a business owner, we get these self-employment taxes. Self-employment tax, 15.3%, and that's our Social Security and Medicare. And you're responsible for that 100% because you're now an employee and employer. So normally when you're a W-2, your employer is paying half of those, and it's taking your Social Security and Medicare right out of your paycheck. You're not paying attention. It's just happening behind the scenes. But when you're self-employed and run your own business, you have to pay 100% of it yourself. And so you can't ignore it. It doesn't happen behind the scenes. You have to take care of it. And that's your quarterly estimated taxes. So I'm bringing this back to being an S Corp. When you're an S Corp, the owner who's working in the business has to pay themselves a W-2 salary. And the IRS calls this reasonable compensation. And so you're getting a W-2 salary from your S Corp. And then you're taking the rest of the whatever is left over. So at whatever the net profit is after that is just it's just taxable income. So you're not paying those self-employment taxes on it. And that's where you see the tax savings. Hopefully I'm explaining this so that you guys can understand. You have two buckets, right? So you have your W-2 salary from your S Corp, and you have just your net profit after that. At the end of the day, that's going to be W-2 salary is an expense to the business, so your net profit. Let's just give some numbers. So let's say as a self-employed individual, your net profit is at 100,000. You then add your W-2 compensation in there as 50,000. We're just going to use easy round numbers here. So now your net profit is reduced to 50,000. So you're only paying your self-employment tax or your Social Security and Medicare on that W-2 salary, which is 50,000. Okay, and the other 50,000 is just taxed as taxable income. And that's where you see the tax savings. But I don't see it until you start to be 58 or 75,000 or over. And it comes with extra responsibilities in S Corp. You have a separate tax return. You have the whole payroll, which I was just talking about, paying yourself a W-2 salary. There's just more bookkeeping, more complicated bookkeeping. So I don't take that lightly. I like to see proven revenue year after year. Your business is growing. It is a really great option for many people to save taxes, but that's really the difference. So the S Corp is a tax election that an LLC can make to help with tax savings. Let's see, I got a question in the chat. Let's go for it. I'm a contracted employee with a curriculum company. I travel away from my RV to schools. The company pays per diem per meals, and the check I get includes my pay as well as per diem. How do I address this in my accounting software and income? Is it taxed? So the company is not reimbursing the meals in general, it's just paying a per diem. It's still going to be included in income, but your meals should be able to be expensed. I don't see, do they separate it out when they make a payment? I guess that's my question. So they're not. It's like a W-2 employee could have reimbursable things, and a 1099 contractor does not. So yes, it would still be taxed, but you could take that deduction. This is something I haven't actually run into before. I haven't had anyone being reimbursed for meals like that. But yeah, so I would include it in income and then take your deduction for whatever you're incurring for your meals that day, if you're going out for lunch or something. Yeah, that's a good question. So yeah, that's the first time I've run into that. I've worked with many contractors, so that's interesting that they handle it that way. Anyone else have any questions? Because I have run through all of the ones that I've gotten prior to today, and I am here for you guys. So yeah, if anybody has any other questions, otherwise I'm going to sign off for the day. Once again, thank you for being here. I really appreciate it. And if you're watching it recorded later, hope it was helpful. So if you think of any more questions between now and the next month, feel free to submit them. Let me get you that link. So that is the link for submitting questions. So I'll take them for next week or next month. And I'll see you in November. Have a great October and safe travels.